Hello and welcome back to Onchain Reaction. I'm your host, James Bennett. I'm the CEO of ByteTree, and today we're going to look at what is going on the Bitcoin network. So we're starting here with a chart showing the difficulty rate. Difficulty is pushing back towards an all-time high after that 28% drop that we saw in late October, owing to seasonal adjustments in China. The blue line here shows the revenue generated per block by the Bitcoin miners, currently sitting close to a high for the year, despite that halving period, at around $140,000 per block. You can see that's been growing since sort of mid-September, accelerating with the price from late October. So the miners are happy and healthy. Okay, the next couple of charts we're going to look at the network traffic, so the transaction value that's being transferred over the Bitcoin network. Now, the Bitcoin network is an internet economy, so we really see that the value of a Bitcoin is related to the amount of value that is transferred over the network. Think of a payment network like Visa or MasterCard, or even a social network like Facebook or Snapchat. You know, the more users transferring content or value money over the network, the more that sort of platform is worth. And the same is very much true with Bitcoin. So at ByteTree, you know, this is a founding principle of the company and why we look at the on-chain data in the way that we do. And here we're looking at the value of those different bands or types of network traffic. So what we've done, you're looking at here is the low value traffic, which we call the core traffic. So taking all the transactions of all different values that happen on the Bitcoin network, we look at the bottom quintile, so the bottom fifth, and see what that value is made up of. You can see the moving average here in that light blue line taken over 35 days. And what's interesting here is that through 2018, you can see that core network traffic's been really steady and has been underpinning the economy throughout that time. A small uptick in July 19 as we saw that short-term bull market, and then steadily building, you know, through the back end of 2019 and throughout 2020. So the core network is activity, you know, really sort of helps generate that price growth for Bitcoin. On the other end of the spectrum here, now we're looking at the institutional activity. So that's the top quintile, so the top transactions. What's the total value of those top fifth of transactions? First thing to note is it's a lot more volatile. It's not core traffic, and it reacts more readily to large price moves. So you can see those peaks and troughs within the different cycles, as well as, you know, the larger peaks and troughs that happen with the larger bull and bear market cycles. If you see now this third chart of on-chain traffic, I've overlaid the two together. So the first thing to note here is really that the volatility of that institutional traffic is much higher, and that the core traffic in the late part of 19 and 20 has really led the institutional traffic. So the core traffic generates the value for the Bitcoin network, and the institutional traffic also adds to that value, but really follows, you know, that core traffic. So the network's busier, it's being used, there's more demand for Bitcoin, so the price of Bitcoin is going up, and institutions see that and they say, okay, I want to have larger positions, I want to allocate, you know, part of my treasury to Bitcoin, and they respond quite quickly and violently to that. And, you know, you can see that on the far right-hand side of the chart, that dark blue line, institutional traffic has really accelerated in the last month and a half as price has jumped up. Okay, a couple of slides now looking at the miners. So here we're looking at the miners' rolling inventory. Remember, that's the difference between what miners are generating and what they are selling or spending for the first time. So when an MRI is above 100%, it means that miners are selling off their inventory. And when it's below 100%, they are holding back and creating more inventory. So we can see miners like to sell into a strong price, and you can see there that the real spikes coincide with strength in the price. You know, we reached 123% as Bitcoin was growing. Now back down to 99%, showing that either miners are becoming a little bit more bearish, or more likely that they've just run off their inventory. So they've been so busy selling their excess stock into the strong market bid that now they've run out of stock to sell. So to demonstrate that point, I've just, on this next slide here, looked specifically at the inventory number rather than the change over a different period. You can see that in the dark blue line, the inventories of miners overall have been steadily declining throughout 2020 as the price has been strengthening. And on the right-hand side, you see that really clear divergence as price increases and inventories run down. So that's basically to say that as the price goes up, miners see an opportunity and offload excess inventory. Mid-November, we can see that actually prices, inventory then starts to build up again steadily or marginally and is currently sort of flat, which makes sense with MRI around 100%. And that indicates really, as I mentioned, that miners have run their inventory right down. 1.5 million coins, think about 1 million of those are Satoshis, and a number of those that aren't Satoshis have been lost. That's all from me for now, and we look forward to speaking with you in a couple of weeks. Thank you.